Colleagues, good afternoon. I'm very glad to see you at our press conference by the Chairman of the Bank of Russia, Elvira Nabiullina, and the Deputy Chairman, Alexei Zabotkin. And to begin with, we'll hear the statement following the Board of the Directors meeting. Good afternoon. Today we have made the decision to cut the key rate to 14.5 per annum. Economic activity is slowing down. Demand dynamics roughly correspond already to the economy's capacity to ramp up supply. However, inflation still exceeds the target so far. Measures of underlying price growth remain in the range of 4 to 5%. Moreover, pro-inflationary risks have risen considerably. They are attributable to the Middle East conflict and possible changes in fiscal policy. In these conditions, we need to follow a more cautious and prudent approach to making our decisions. Taking this into account, we have slightly raised the forecast of the average key rate to 14 to 14.5% for this year and 8 to 10% for the next year. I will now explain the reasons behind our today's decision. Firstly, inflation. In March, current price growth did not decelerate, staying at about 6%, which was associated with one-off factors. Specifically, the Middle East conflict led to the redirection of tourist flows, which induced a rise in service prices. Another factor was growth in retail prices for petrol. Although transitory factors significantly contribute to price dynamics, we scrutinize fundamental reasons in the first place when analyzing inflation. The key aspect is the balance between the economy's production capacities and demand dynamics. Although the gap between the said indicators has almost closed, underlying inflation still exceeds 4% as a result of the demand overheating that was observed over previous periods. It continues to translate into inflation expectations which remain elevated. Additionally, increased budget expenditures in early 2026 also exerted upward pressure. Nevertheless, we forecast that the accumulated tightness of monetary policy will return underlying inflation to 4% as early as H2 26. We have kept the inflation forecast for this year unchanged at 4.5 to 5.5%. Secondly, the economy. Economic activity decelerated in Q1 26, which was partly explained by the economy's adaptation to the tax changes. Another contributor was calendar effects. The first 2 months of the year had 3 fewer business days than January-February 25, which accounted for up to a half a percentage point decrease in year-on-year GDP growth rates in Q1 26, according to our estimates. In Q2 2026, this factor will have the opposite effect. May-June will have 3 more business days than a year earlier. All this means that we will only be able to assess output dynamics more accurately based on statistics for the first 6 months of 2026 as a whole. Investment activity has generally declined while remaining highly heterogeneous across industries and regions. Thus, mining and quarrying enterprises had moderate investment plans in early 2026 due to last year's weak financial results. Companies may revise their investment plans upwards this year due to higher prices in global markets. Construction is also expected to rebound to a certain extent. The abnormal frosts and snowfalls at the beginning of this year led to the forced downtime in Q1 26, and therefore construction companies will make efforts to catch up in the next quarter. According to our forecast, total investment in 2026 will be comparable with last year's amount. Consumer demand growth also slowed at the beginning of the year. March saw signs of its revival, with car sales expanding notably. However, the rise in consumption is generally more moderate than in the previous year. The labor market is recording more obvious changes. Businesses have started to reduce their recruitment and payroll increase plans more actively. The percentage of businesses reporting acute staff shortages has been declining. Some companies have begun to lay off employees. That said, the unemployment rate stays at its record lows. This means that in the vast majority of cases, people manage to find new jobs, especially in large cities where companies still demonstrate rather high demand for labor. Overall, the labor market tightness has been decreasing gradually, and its pressure on businesses' costs will be weakening. The economy's moderate dynamics in Q1 26 will be offset in the next periods according to our estimates. In addition to calendar effects, this will be driven by a partial rebound in consumer and investment activity, which is already obvious from high-frequency data for March and April. Higher prices in global commodity markets should become an additional factor that will support domestic demand. Considering this, we have kept our GDP growth forecast for this year unchanged at the range of 0.5 to 1.5%. Thirdly, monetary conditions. They have slightly eased overall since March, while remaining restrictive. Interest rates on main financial market instruments have continued to go down, adjusting to the key rate reduction. Credit activity remains moderate from the beginning of the year. Consumer lending demonstrates signs of a rebound, while growth in the corporate segment is still modest. In Q1 26, part of companies' financing needs were met not by loans, but by record-high advance payments from the federal budget. As a result, the growth rate of money supply, which combines the effects of the fiscal and credit channels, is running closer to the upper bound of the 2016-19 range, when inflation was sustainably low. If the fiscal policy's contribution to money supply remains more significant, the dynamics of bank lending should be more moderate for the growth rate of money supply in the economy to stay at the current level. Interest rates on time deposits have also been declining following the key rate. In these conditions, households have started using other financial instruments and demand deposits accounts more actively. Household saving activity remains high overall. Now, I would like to speak of external conditions. The situation in the Middle East remains a factor of uncertainty. According to our baseline scenario, the conflict will entail a slowdown in the world economy, a global rise in logistics and energy costs, faster inflation in higher interest rates worldwide. We have revised upwards the forecast of the Russian oil prices to $65 per barrel for this year, as well as the forecast value of exports. The value of imports will also increase due to higher global prices, albeit less notably than exports. The surplus of foreign trade will significantly exceed the level that we expected in February. However, the influence of these additional export earnings on the ruble exchange rate will largely offset by the fiscal rule mechanism. Thus, the resumption of fiscal rule-based operations will have a stabilizing effect on the foreign exchange market. I will now speak of risks. As for the budget, its expenditures in Q1 26 considerably exceeded both their seasonal norm and the elevated values of 2025. In previous periods, when the dynamics of expenditures at the beginning of the year were elevated, they were usually followed by larger expenditures and a more notable budget deficit for the year as a whole. We're now expecting the updated budget parameters for this year. The general logic remains the same for us. The larger is the fiscal stimulus, the lower should be the growth rate of the second component of money supply, that is lending. This means that, all else being equal, the key rate should be higher. An important risk related to external conditions is the situation in the Middle East. If the conflict drags on, the adverse effects for the Russian economy will be strengthening. The implications caused by global rise in costs might turn out to be more serious than the benefits from larger exports and a stronger ruble. Disinflationary risk is a more considerable cooling in domestic demand than assumed in our baseline scenario. Winding up, I would like to comment on our future decisions. We have currently reached the point where demand overheating has almost dissipated, while inflation has not yet returned to its low rates due to the time lags of monetary policy transmission as well as heightened inflation expectations. According to our forecast, the accumulated tightness of monetary conditions will help bring underlying inflation down to 4% in its sustainable part in H2 26. Nevertheless, our further key rate decisions will largely depend on how the situation will be unfolding and to what extent the risks I mentioned will materialize. Thank you for your attention. Colleagues, please, your questions, and don't forget to introduce yourselves and identify your agency. Rita, please. Thank you very much. I don't think I will be original. It's very interesting for all of us, I'm sure, to know what were the options that were on the table today. And could you also please specify the forecast? If the average rate range has become narrow, does it mean that there could be a bit of a pause during the next Board of Directors meeting, consideration of the rate? Thank you very much for the question. We reviewed two options, keeping the rate and lowering it by 0.5 percentage point. I will tell you right here and now, those who were in favor of keeping it as it was noted that in the sustainable part, inflation hasn't been going down since the middle of last year, staying at the level of 4 to 5%. And so one needs more convincing evidence to show that the sustainable process of the inflation going down, as well as noted the higher pro-inflationary risks. With regard to narrowing the forecast range of the key rate this year, first of all, it is related to the fact that part of the year has already gone, and in terms of inflation, we're currently moving at the upper part of our forecast range. That is why we lifted towards the lower part of the range by 0.5 percentage point. Pauses are always possible, and our signal about appropriateness of such a decision contains such breaks, such pauses. It will all depend upon the data. Even when the signal points towards more moderate decisions, the pause is possible. Colleagues, please, Rita, in the second row. Margarita Mordovina, RBK. You have already stated in your statement the return to the fiscal rule. Could you be a little bit more specific, if I may ask you so? Do I understand correctly that the Bank of Russia, for the first time over so many years, is going to act as a pure buyer of foreign currency in the domestic market, considering the mirror-like approach to our own transaction? Have you taken into account this factor when making the current decision with regard to the key rate? And do you see any pro-inflation risks from this range because of the possibility of the exchange rate moving around and the possibility to respond to the inflation expectations? Yes, against the current oil prices, exactly. The National Welfare Fund could be further topped up. But as far as the fiscal rule is concerned, we saw that the Minister of Finance previously made an announcement that is not going to reconsider any social cut-off and will go back to the fiscal rule, and at the same time will take into account the previously deferred operations. So in terms of the annual indicators, this is neutral because that may generate an effect only within the yearly dynamics. Yeah, well, the fiscal rule never was put on stop because there was a pause in transactions in the exchange market related to the fiscal rule. Colleagues, please. Maria. Maria Filushina, Bitkogan. The Bank of Russia, for 3 quarters in a row, has been reducing the key rate, but at the same time, we do not see any sustainable reduction of the inflation expectations, and the stable inflation indicator, in the meantime, is below the Bank of Russia target. Will the Bank of Russia, with such circumstances, will be able to achieve its inflation target within the immediate year? The short answer is it will. Now, the question is what kind of the key rate trajectory will be required for that. We will further specify it as the situation in the economy unfolds and how convincing the inflation slowdown is, as well as the inflation expectations going down, something that you also referred to. Of course, we would feel much more comfortable to pursue our monetary policy if the inflation expectations were to be anchored at a much lower level. But we are aware that it's a higher level. I mean, it's straightforward right now in terms of the uncertainties and the risks that we see around, and particularly the longevity of the high inflation period. So the high inflation expectations, amongst other things, is also one of the reasons as to why we slightly have raised our key rate forecast for next year, and we will definitely will be gauging our decisions to the inflation expectations dynamics. Olga Simonova is coming next from Kamchatka Media, from the Petropavlovsk of Kamchatka City. As we understand, the rationale of the Bank of Russia fighting inflation through more expensive lending means that people will cease to buy expensive goods. If the products are becoming more dear, then the prices will be going down at some point. But offer to a hungry one to choose to buy bread at whatever the price is, so definitely this person will choose buying a bread. So following your logic, the price for bread will never go down because the demand for it is infinite. Does it mean then within the segment of the staple goods, your policy invariably won't work and the prices for it would always grow irrespective of the key rate? Well, indeed, it seems that if the demand for staple goods is not really dependent upon the prices, which is the case, the price for such products like bread will continue growing endlessly. But that doesn't happen. Let's consider why. What exactly our key rate can do? Certainly it cannot combat the price growth per individual services and goods, but most importantly, it may curb the general price growth. And our task is exactly not to allow for an uncontrolled price growth over the board for bread, for medicine, for milk. Uncontrollable price growth and very accelerated price growth happens if there's more and more money in the economy, but in terms of goods and services, they are not catching up. And that is why, just imagine if we were not to raise the key rate when prices start spiraling, what happens in such a period? Manufacturers begin hiking prices because they see strong demand. In response, people are demanding wage growth, and it becomes a vicious circle. Prices are growing, wages are growing, business again raises prices, and in fact, inflation eats up households' incomes and any growth in wages. And the first ones to suffer here are the pensioners and lower income categories, which cannot participate in such a race. And so increasing the key rate, we effectively create the possibility to sever this vicious circle. Whenever in the economy the amount of money is not growing uncontrollably, the people and companies are more prudent in spending, and manufacturers are not having this temptation to raise prices endlessly. Even for the staple goods, prices don't grow so fast, but the competition is so important here. If the bread becomes more expensive, in order for there to be a different producer who can sacrifice part of its margin in order to broaden an offering in the market. And so competition is a crucially important element to contain price growth, and this is super important for such products as staple goods. Maybe I would also like to add that staple goods, they are in the area of special attention by the government, and the government is undertaking measures, amongst other things, to restrict price growth for such goods, like, for example, the subsidies to the bakery industry, to millers, export tariffs, for example, right now to stabilize grain prices, the so-called price dampening pricing is being used because whenever the price is high, the grain exporters are paying high duty. In these, money is offered as subsidies to the grain producers. So this is also another important factor to restrict prices for staple goods. But the key rate is effective as well, not momentarily, but it protects the households and their income so that people have enough money, and everybody has enough money for everything they need for their everyday lives. Julia, in the third row, please. Good afternoon. Lydia Rastargova from Market Power. What kind of a set of macroeconomic statistic will be a signal to the Bank of Russia that the economy requires support and stimulus, also through the reduction of the key rate? Thank you. Well, as we have already mentioned, we are observing the whole conundrum of the macroeconomic indicators, but in order to build up, first of all, we are currently reducing the rate. But in order to either reduce more abruptly, the key rate, or in order to pursue a softer, stimulating monetary policy, we need inflation to fall below the target for the indicators to show considerable unemployment growth, but neither this nor that is what we are seeing currently, and not only in our forecast, but also the businesses and the analysts point to that. Please, Mr. Zabotkin. And now, to the extent we need it, in case such circumstances manifest themselves, it would be prescribed to really pursue a soft monetary policy like the case was with us back in 2020. Let me remind everybody, during the COVID time, when the demand really plummeted here in Russia as well as in the rest of the world, the Central Bank of Russia as well as other central banks pursued a very soft monetary policy in order to support this demand. But in the meantime, we're not facing it because our unemployment is at its record lows. Inflation, in the meantime, is slightly above its target level, and the real household income continues to grow. So there is no indication of the economy is going into the overcooling. Colleagues, please, Nastya in the second row. Thank you. Anastasia Savirova, Interfax. You emphasize such a thing as uncertainties within the budget parameters, highlighting this factor in your first part of the statement. Can one consider that, as you can see, considerable strengthening of pro-inflationary risk within this factor, as well as a specification that there will be a need for a tighter monetary policy in case the structural budget deficit develops? Can we interpret it that you don't expect considerable budget spending reduction despite a favorable market environment forming? On top of this question, I would like to ask, do we understand correctly that the narrowing of the range means that the space for the reduction of the range is, of the key rate has also dwindled? Well, you definitely should know that there is a debate going on right now about the possible changes of the budget parameters. And in order to come to a final conclusion, we need the budget parameters to be officially announced. That is what we're looking forward the government to do. But the logic is the same. The higher is the budget spending, or more importantly, if there will be a primary structural budget deficit, that would require a much tighter monetary policy, which would mean what does the primary high structural budget deficit means? It means that through the budget channels more money will flow into the economy, which means that the space for the private lending will be narrowed. This is something that we will take into account, but in the meantime, while the parameters are not being announced in this debate, we understand that this risk remains. It exists, it has strengthened, and I would wish to say we're less confident in the disinflationary contribution on the side of the budget as had been originally expected in the budgetary bill. Now, as far as the narrowing of the range of the key rates is concerned, as I said, inflation, based on our estimates and based on our analysis, is flowing along the upper threshold of the forecast range. And yes, against all other things being equal, that would mean less room for the key rate to be brought down. Dear colleagues, please, Marina, in the second row. Marina Pimenova, Internet Business News. For the first time for over than 50 years, humanity was able to come close to the moon, which proves again that there's nothing impossible. Speaking at the Exchange Forum, you stated that this year the central bank is intending to draw the line under the 5 years of high inflation. Does this mean that we are already coming close to the 4%, or we're just at the starting phase and there is a lot of ground to be covered for us to this 4% like it is to the moon? You're quite right. Humanity needed 50 years in order to go back to the moon. We will also go back to the 4% inflation. I'm quite sure of that, and I'm sure that it will happen much faster. Thank you. Dear colleagues, Anastasia, please, in the third row. Thank you very much, Anastasia Bashkartova, Independent Gazette. In the course of last week's meeting dedicated to the economic issue, President Putin paid attention to the fact that the current macro indicators trajectory in the Russian economy is below the forecast by the government and the central bank. He further specified that one shouldn't really explain it only by the calendar factors. Now, my question is this. Still, how does the central bank himself explain as to why the situation in the Russian economy is following the trajectory that is definitely below the government agency's forecast? And also, can one say that the Russian economy is demonstrating the overcooling factors than just simply cooling? Thank you for your question. Well, the statement about the overcooling is something that we do not agree with, as Mr. Zabotkin before me mentioned, because to talk about overcooling, you have to have the evidence to really prove it. First of all, that is in the considerable unemployment growth, and that the inflation is falling much below the targets, and that the household incomes are falling. Neither the first nor the third, or the second, for that matter, are there. But indeed, in the Q1, the economic activity rate has slowed down, and the rate growth in January and February, speaking about January and February, turned out to be slightly lower than our expectations. To a considerable part, this is explained by the time factors that the president noted. The calendar's less 3 business days, and the weather conditions, which nobody could forecast in the end of the year, which considerably impacted individual such important sectors as construction and development. The consumption also slowed down after the spike it demonstrated in the end of last year, and the businesses needed some time in order to adjust themselves to the new tax changes, which is a bit difficult to really foresee in terms of how this adjustment may turn out. But based on the frequency data in March and April, not just only frequency data in the meantime, we see that the economy is rebounding, is returning to its growth path, and that is being demonstrated not only by the quantitative frequency data, we also see it through different surveys, which we did, for example, one in April, and the current assessment of the business environment has been improving, and the business expectations for the next 3 months have also improved. Now, intra-year fluctuations may take place, but whatever happened in the first quarter, these changes of the rates, them turning out to be lower compared to what we've expected, that didn't lead us to changing our forecast for the current year. We kept our forecast in terms of the economic growth, bearing in mind the redistribution of the working days between the first and the second quarter. A more precise picture is what we're going to see closer to the end of H1, to our mind, individual months. And even the first and the second quarter separately should not be interpreted, because that may lead to an incorrect conclusions with regard to the trends forming. One other thing that I would like to remind you, because people often oversee it, because the kind of dynamics that really forms up during the first quarter, it reflects the consequences, or rather the level of the tightness of the monetary policy of a year ago, because we went through the peak of the tightness of the monetary policy. So right now we see this effect from the reduction of the rate, and this particular effect is not going to be an instant something. Dear colleagues, please. Oh, yes, I see. We have a question coming online from Evgenia Pismina from Bloomberg. Evgenia, please. Good afternoon. I would ask you a very quick question. At present, we see in a lot of places the use of AI. Now, I'm interested to find out whether the central bank uses artificial intelligence, and if so, where? Do you use AI when making your key rate decisions? Well, thank you. Thank you for your question. Yes, indeed, we're trying to use AI whenever we see a good outcome from it. In the first place, as an assistant, when doing certain routine things, when analyzing information and data, but when we discuss the monetary policy or making our decisions, we don't not use it. One, in an analysis work, when we do the primary data analysis, we use AI, but in the meantime, in terms of higher level decisions, AI cannot displace professionals. Elena Fabricnet, please, next one. Elena Fabricnet, Reuters. Could you possibly already have the Bank of Russia assessment what was the decline of the GDP growth through Q1? And nevertheless, what are the measures that the authorities are going to institute in order to support growth? I would ask Mr. Zabotkin to answer the first part of the question. As I said, that the data is too noisy in order to be able to make an assessment, particularly, as you know, with regard to the GDP and the quality distribution thereof are always being specified and with quite a lag. Alexei, please. Well, the first assessment of the GDP during Q1 will be given by the Russian Office of Statistics in the middle of May, and we will scrutinize it, definitely. But generally speaking, a very important premise is that most probably it will be strongly different from what the data demonstrated in January and February, because January-February data have been very strongly distorted, all of these time effects that the governor already mentioned. So the first quarter statistics and GDP will be notably more visible and much better than what has been expected in January and February. As far as the acceleration of the economy information is concerned, it is very important, but we do understand that we don't need just a one-off leap and then the slowdown. We need a sustainable economic growth. And within the conditions that we find ourselves in and the labor market environment, I mentioned it before and I will reiterate it again, we can grow sustainably only at the kind of rate that the labor productivity is showing. That is the key element. I mean, the growth of the labor productivity, including the inflow and the redistribution of the resources into the industries and into the businesses where the return from such resources is greater. I mean, the central bank also, in terms of the monetary policy, is facilitating the creation of the predictable, stable macroeconomic conditions. And believe me, stable macroeconomic conditions and the price stability are very important to make decisions with regard to investments, amongst other things. Apart from it, we also are facing the task related to what we do as the financial market regulator, because I see here a strong potential for the capital market development, because the capital market is best redistributing the resources to where the returns are greater, where the labor productivity is greater. This is a whole set of measures that we're working on with together with the government. And so to my mind, it is very important because the support measures are being extended against the high key rate, understandably, but credit subsidization, for example, it is important with regard to it as well as for the businesses not to conserve ineffective manufacturing. There has to be an overflow towards more effective resource application. Colleagues, Anatoly, please. Good afternoon. Anatoly Sikor, Izvestia Gazette. Some of the business representatives and experts already expressed concern over the economic overcooling risks. Does the regulator identify such risks right now, or are we still within the controlled overcooling trajectory? Thank you. As I already mentioned, we don't see overcooling risk. There are overcooling indicators that we see. Unemployment, inflation below the target, household income decline. Neither of these we see, but we believe that we're already close to a state when the demand overcooling has been exhausted. You see, that's very important. It is also important for it not to restart itself again. So we need to pursue a very cautious monetary policy. But we are of the opinion that we're currently at the point where the production opportunities and the expansion of the goods and services production are in line with the demand growth rates that we see. Mrs. Zabotkin would like to say something? No? Thank you. Dear colleagues, please, Evgeny Popov, Invest Future Agency. very strange things are going on with the labour market. Inside the investor community and in the analytical community, they don't understand why one should really take into account, because the key rate is growing, the unemployment is growing, the key rate is going down, the unemployment is going down. So my question is, doesn't the Bank of Russia see that certain manipulations with the key rate, like keeping it at some kind of a higher level or just a tight policy, somehow exhausts investment and other economic industries which are more sensitive to the rate rather than the consumers, because we somehow end up currently the payroll is still higher than the labour productivity, I mean the payroll growth. So that is my question. Well, but the labour market is still bears a lot of significance. The wage growth, not only the wage growth or unemployment, but what's the dynamics, both in the wage growth and the productivity growth. If the wage growth is seriously ahead of the labour productivity, how much, for example, a worker may produce products and services. It all translates itself into the price growth, and we may end up having the inflation spiral like I've mentioned before, and so the wage growth and the inflation growth will ensue from that. We currently are seeing that the tension in the labour market is diminishing, and this is not as much as the unemployment indicator, rather than the adaptation of the labour market happening via different factors, not only via unemployment. And actually, we are also closely monitoring situation with the partial employment. Yes, indeed, there is a bit of a growth there, but in aggregation, it's about 300,000 people, and this is just not the kind of an indicator that would add to the effect. You are right about unemployment, but I should tell you that investments have grown strongly over the several previous years, even despite the fact that last year investments somewhat went down. Comparing it to 2021, the level of investments currently is by a quarter larger, so there is a considerable investment growth which we are hopeful eventually will translate itself into labour productivity and into this overall growth. So situations may differ in different sectors, but I shall repeat it again, that such an overflow of labour into more effective application with a greater output. The labour productivity is very important for structural change, and generally, the key rate in the monetary policy principally is not intended to solve structural problems. However, what you are referring to is important for us to make our decisions with regard to the monetary policy, so definitely we are closely monitoring and analysing labour market. Mr. Zabotkin? Yeah, the labour market situation currently is much more indicative in terms of the reduction of the deficit of labour in the businesses which want to expand. The availability of labour. In our monitoring, this is 5 and on a quarterly basis. There is such an indicator that we view. There was another wave in the April round. You can see that since the middle of 2024, the availability of labour to businesses is improving, but it remains less. Still there are more businesses which are saying slightly more than a half. It is less than it used to be back in 2021. We haven't yet gone back to that equilibrium in the labour market which we had until 2022, and that keeps up the situation within which competition for labour increases the labour costs, and that remains the factor which supports inflation still above the target level. Mr. Zabotkin, you should also mention that on the other hand is below the peaks level. Yeah, this is a sustainable trend. Yes, the most acute situation we had in the middle of 2024. Again, I would like to refer you to our data and reports, because in our coverage of that period we have it on the 17th page. Yes, Mr. Zabotkin always keeps this particular business monitoring report right on his desk. Yeah, dear colleagues, we received the next question online by Alexei Prokofiev from Yekaterinburg. Bank Information Agency why deposit rates are falling faster than the key rate. From its peak levels, the key went down by 6 percentage points, while deposit rates, considering the central bank information about the average peak rate, already 9 percentage points. Well, the first thing that I would like to draw attention to is simply remind you that the deposit rates, in their normality, they're always lower than the key rate. And the current situation is quite appropriate to this. If you recall the situation when we used to have the key rate like we're having now, the deposit rate also used to be lower. Now, the reason as to why the deposit rates went down faster than the key rate can be explained by the fact that in the end of 2024, we happened to be in an extraordinary situation when the deposit rates were higher than the key rate. The norm is when they're below, but we had them higher, and it happened because then the period banks were trying to restore their short-term liquidity standard. They were fighting for bigger deposit inflows by offering higher rates, and it was quite logical. When the liquidity became okay, then the deposit rates became normal and were going down faster than the key rate then. So what I would like to draw attention to, which is also important, based upon the cycle that we're going through, when the rates are going down, there is an expectation that the monetary policy is going to be eased, and then usually the deposit rates are going down faster than the lending rates, because this is also something that is happening right now. Why? Because we know that depositors practically always have the possibility to withdraw their deposits pre-term in order to place it in another deposit under more favorable terms, and the borrowers can refinance themselves. So both of these means the interest risk. And in order to really safeguard themselves, the banks usually, whenever the key rate is being brought down, they are reducing the deposit rates faster, and so the current cycle is no exception right now. Thank you, dear colleagues. Elvira. Good afternoon. Elvira Nabiullina, RIA Novosti. This week, there was quite a noisy story in terms of the Eurotrans bond buyout based on the coupons. Does the central bank see that there is a default risk with regard to many businesses in Russia related to this bond situation? Do you see a need for an additional protection for the owners of such public bonds? Yes, to a certain extent, we've been confronted by a new situation in the market, because until now, there was never an offer, a default in terms of such securities buyout, because originally either Minister of Finance or the regional authorities placed such bonds with the development of the digital platforms. Corporates also became issuers thereof. Quite often, such paper makes it possible for the owners to, call these bonds to maturity, and so it looks almost like a current deposit, so you can redeem your bonds without waiting for the final maturity. But it could be a difficulty if the investors are showing the run on them. And so the banks, for such cases, has an interbank market, also refinancing by the central bank, while the corporate issues don't have it. And so in the foreign experience, we've looked through it. For such high liquidity instruments, there are certain prudential mechanisms in place which stop this liquidity run. They curb the investor appetite towards such products. So we're currently thinking about further fine-tuning of such people's or public bonds market from this viewpoint. There is also a question about the non-qualified investor access to such securities, because the public bonds is something that we are not limiting, not restricting, but what we're restricting is to limiting the sale of papers with a structured yield and wholly rated, because originally through the broker houses they could have been offered only to the qualified investors, but such restrictions are not imposed upon financial platforms. Only brokerages have been restricted by it. In May last year, in the very beginning, we recommended such platforms not to sell such securities to non-qualified investors. In October last year, this restriction was introduced as a legally enacted restriction. For example, if the bonds don't have a high rating, they have to be tested, because even if this is in non-structured income, the investors must understand that there is a risk of a default there. So investors must be aware of the kind of what kind of security they are investing into. Thank you. Igor, in the second row, please. Good afternoon. Thank you very much for this work. Yet again, I've got a more conceptual question. I would like you to be more specific about the balanced growth parameters. The Bank of Russia, on more than one occasion in its statements, was saying that there is a certain balanced growth trajectory, but simultaneously we see now that we don't have enough of labor. I mean, businesses don't have enough hands. Last year already we had less investments. So if we discard defense industry, in the rest of the industries we have less access to foreign manufactured equipment because of the reasons everybody understands. And so currently quite a decent part of growth comes from services, from consumption, which is, by way of inflation, something that the central bank is fighting. So how do you see the balanced growth today? How do you define it? If it is more towards services and products growth, to what extent this construction is stable? Yes, thank you very much for your question. Balanced growth to us, whenever we talk about the economic balanced growth of the economy, is when the aggregate demand growth that we are able to impact is in line with the possibilities to enhance the output of goods and services. If it is automatically high, that would mean a higher inflationary pressure. Therefore, that is rather about the correlation between the demand dynamics and the supply and the goods and services supply dynamics. Now, what we need to also consider the growth structure. We don't expect systemic shift of the growth structure towards consumption through the reduction of the share of investments. If you take a look at our forecast, within the 3-year time frame, the investment growth is higher than the economic growth, it's higher than the consumption growth. And that calls for a further growth of investments within GDP. We are certainly talking about the average values. When the economy, we refer to the industry. If there are industries where investments are going to grow faster, and there are also industries where investments are going to slow down, shrink, but if we talk about the economy in general, then we anticipate specifically that the GDP share is going to become bigger. When I spoke about the balanced growth and that the aggregate demand would be in line with the production capacities, you shouldn't confuse that with investments, because the production possibilities is the result of the investments which had been committed yesterday. So operational capacity today is your yesterday's investments, and so effectively the production opportunities is what the economists describe as the fixed assets accumulated in the economy. So this amount of investment strongly grew through 23-24. Even if investments remain at the current level, I mean the amount of investments, that would be sufficient in order for production capacities to grow faster compared to the past periods. So you also need to take it into account when assessing the dynamics. Thank you. Colleagues, please, are there any more questions? Misha, please. Mikhail Maseyev, Frank Media. Already through the past 4 months, do you see any stable trend of people and citizens being more active in using cash for their payment? What do you think about the discounts being offered by retailers if cash is paid? Another question is this. Recently, several small private banks have been nationalized. How do you see their future? What are you going to advise the Minister of Finance of? Would you be considering of selling them to any larger bank? And how many banks are there right now with the government ownership? Let me begin with your second question. We got quite a number of banks, or rather not the number, or rather quite a big share of banks with a government ownership. It's somewhere stable, around 70%. It hasn't grown. Now, in terms of the quantity of the banks with the government participation has gone down. We used to have 40, now there are 37 of them, but that usually is because of the consolidation inside the banking sector. Now, the situation that you are referring to, we are seeing them very infrequent because the government, as the owner of such banks, it makes up its mind, and the government is going to decide how to dispose thereof at its own discretion. The only thing that I can mention, in case such banks are to be sold to the new proprietors, these new proprietors will have to correspond to the requirements set forth in the legislation in as far as the financial stability and the business reputation are concerned, and the central bank is going to track it. Now, with regard to the demand for cash, well, yes, the demand for cash in the beginning of the year was higher than last year. We saw it. Well, in the first half of last year, it was below the usual norm. But in terms of there being any conclusions made about structural shift, it's premature. We will definitely be monitoring it, but the overall share of cash inside the money supply remains at a minimum. Mr. Zapotkin, no, nothing to be said. All right, thank you. Thank you. The next question comes online from Seda Magomedova, Chechnya Today, from the city of Grozny. Seda, you're welcome. Good afternoon, Elvira Sahibzadovna. I've got the following question. In the Chechen Republic, because of the natural clemency, 4,363 households suffered, where more than 90,000 people lived. I'm sure that some of them have loans. Can the Bank of Russia recommend a bank operating in the territory of the region to meet these people's needs halfway, so that they could, because some of them do have the credit grace periods only if they are included into the official list of those who suffered because of the calamity. In this case, people who are trying to rebuild their homes won't have to think about monthly payments. Well, yes. First of all, I would like to express my condolences to all those who suffered from the flooding, both in the Republic of Chechnya and Dagestan, and I understand that without any delays, help must be offered, because always in such cases we send a signal to the bank that they should support those who suffered from it and offer additional postponement of loan repayment. And I must admit that the bank has always acted well on such advice, understanding their social responsibility. Since 2023, this has already been written into the law. The entitlement that people are given to have a loan grace period in case such a calamity happens, which also states that the local authorities, local government, must expediently give respective documentary confirmation to those who lost their homes, lost their property, after which borrowers can go to the lenders within the 60-day period in order to settle the matter. We are very closely following the way the insurance companies and the banks are helping such people, and whenever we receive a signal or any grievance, we are ready to really get engaged
engaged, because in the meantime we do see that the banks are really doing a good job and also offering their own restructuring programs, which sometimes are more flexible than the grace periods offered under the law, because truly the financial institutions, as far as this is concerned, have a lot of expertise, and we do see that the financial organizations are responding to such situations very quickly. It is important that the second part of it, I mean the one dependent upon the local authorities and the local financial institutions, to also follow suit. Anna, in the third row, please. Good afternoon, Anna Gromova from Anna Finance. I have a question about unemployment, because today we have already mentioned it several times. Now, bearing in mind the fact that indeed right now the subscribers are complaining that some have been made unemployed, and the unemployment growth itself is a factor, as you mentioned, is one of the indicators of the economic cooling. Does the central bank see risks of any further unemployment growth, let's say in the second half of 2026, and due to that, quite possibly, there will be a much quicker key rate reduction following it then? Thank you very much. No, we don't see such a risk of unemployment growing, but the unemployment parameters and the labour market situation, as I mentioned, is a very important indicator that, alongside with other economic indicators, we are analysing very scrupulously and always discuss whenever we make our key rate decisions. So if there is a data available which will point to a very strong emergence of unemployed, because we're currently seeing structural changes in cheese, because the hands are moving from one sector into another. So if the economy is overflooded by it or inundated somehow, that would mean later on quite a possible significant reduction of consumer demand, and the inflation falling much below the target. If we expect this to happen, not wait until it comes, because the scenario basically points to it as a possibility, and the inflation expectations would fall below our target, that would definitely be the reason in order to reduce the key rate much stronger than the current baseline scenario calls for. But in the meantime, we don't see it. Yes, Mr. Zabotkin, please. Going back to the availability of labour to businesses, first of all, that gap must be closed. The gap of a shortage of working hands. The businesses are referring will need to go back to the beginning of 23, not where we used to have them in the 2021. And only after that, the freeing of labour in some businesses will start impacting the unemployment level, because in the meantime, the hands that are becoming free are filling the vacancies that are opening up in the businesses, or are remaining in the businesses which are complaining about not having all of the vacancies filled. But that applies to the whole economy, you see. Yeah, it does. Thank you, colleagues in the last rows. Natasha, please. Well, I also have a question about unemployment. Natalia Trushina, the Moscow Komsomolets, during the exchange forum on April 17th, you said that one of the reasons behind the overheating of the economy is in historically low unemployment. However, as far as rank and file people are concerned, there is a bit of a paradox, because their payroll is growing. They are quicker in finding jobs. There is a strong competition for them. They earn more, they spend more, and ideally that should generate a favorable impact upon the economy. But this situation, as it turns out, contradicts macroeconomic interests of the country. So in this case, how one can resolve this contradiction? Can it be resolved in such a way so the Russians' incomes will continue growing, and or one should allow the unemployment to grow to 10%, and so that is never going to be the reason behind the economic overheating, and would rather incentivize its growth? Well, I would like to underscore that the macroeconomic interests of the nation in the first place is making sure that the well-being of its citizens grows. And it is being defined, amongst other things, that the savings and the incomes of the people are protected from inflation. That is the most important component here in the well-being of it. So I don't see any contradiction here. But I would like you to be more specific, or rather, sound more specific. Low unemployment is not the reason. That is a testimony of the economic overheating. The reason was the demand overheating, which was growing faster than the capacity to produce goods and services was growing. And that led to a stronger competition amongst the employers for labor, and the wages growing faster than the labor productivity. Now, if the wages are growing faster than the labour productivity, the growing spending, like other types of expenditures, is what the manufacturers translate into prices. And so this faster inflation eats up any top-up of wage. It's really good when the wages are growing in line with the productivity growth. And I'm sure that everybody understands that. So if that is the case, then inflation is not going to spiral. The well-being will be better. Yes, when getting out of this overheating, the unemployment may go back to its average longer period, because some economists even consider 5 to 10 years. But any averages, they are much closer to the current lower rates of growth than the kind of values that you refer to the current low levels of low levels of unemployment. Much closer, these indicators, if you take a closer look at them. Thank you. Next question comes from Irina Tsingueva from Chita, ZAP News publication. Irina, welcome. Good evening. Irina Zubova, ZAP News publication from Zabaikalia, from Transbaikalia. Now, against the current key rate, how does the central bank assess the different effects for the monetary policy for the central regions and the remote regions where the logistics and supply chain are much higher? Like in Transbaikalia, a considerable amount of prices is being formed by logistics. Now, can the monetary policy effectively fight such non-monetary inflation? Thank you. Well, thank you. Well, to begin with, let me say whether the monetary policy can fight the so-called non-monetary inflation, because we've always been saying that the key rate impacts demand only. You are absolutely correct that prices are being affected not only by demand, but also there are costs sitting in prices. But the fact of the matter is that these costs, if they grow, businesses can translate them into prices only if demand is growing to the extent that enables within this growing demand to translate this cost. When the demand is moderate, people are not in a hurry to spend a lot, and businesses are not in a position to translate prices fully into prices. So companies have to sacrifice part of their profit in order to avoid losing their turnover. So tight monetary policy in this sense is effective. We do see it. Back in 2025, inflation went down practically in all of the Russia's regions. Now, the question is whether the single key rate suits all the regions and the so-called the central war regions, the remote regions. Well, because situation differs, of course, but against all the regional differences, our task, our objective, is to provide for the price stability across the country. And the economy is a single body, and so we pursue our monetary policy for the sake of the whole country. Just imagine if we start running differentiated policy in different regions, what it would mean. For example, for more remote regions, a lower key rate is going to be offered hypothetically, and for other regions it's going to be higher. You would hardly enjoy it if the Muscovites will enjoy a higher interest rate on their deposit compared to your regions, or vice versa. Businesses in the central regions are not going to enjoy having to pay more interest for the loans they can take. They would start going for the loans in other regions, and so it would mean still the need to raise the single key rate. In the single economic space, such situation is hardly plausible. But you're quite right that all the regions are different. We do see that inflation nowhere can be the same. It is still different in between different regions. Amongst other explanations to it is that the supply chain costs are different, but the inflation dispersion is very much dependent upon the average level of inflation. The lower is inflation, the narrower is the range of difference, despite the fact that some of the supply chain costs can be higher. We saw it through the example of the period when we've enjoyed a stable low inflation. So the differences in between different regions was not very tangible. Thank you, dear colleagues. Irina, in the last row, I see your hand. Please, go ahead. Thank you. Irina Nabiullina, Money Doesn't Sleep channel. the viewers of our channel almost every week are asking us to tell them about the status of the blocked Hong Kong securities. It would be great to find out what is the current status of it, because this Hong Kong securities could have been also bought by the non-qualified investors. So under the current environment, it would be extremely relevant to find out whether there is an expectation for any wave of the conversion of the blocked securities into the ruble equivalent, for example. While the Hong Kong shares indeed remain blocked, the trading of those securities were put on hold after the St. Petersburg exchange was added to the sanctional list, and the foreign depositories, which were part of the whole chain of the transactions, had to also stop their transactions. So currently the Moscow Exchange is continuing to unblock it and runs the necessary series of measures to go through the compliance. So this whole thing is being worked on. Next one, Nikita, please. Good afternoon, Nikita Mitrofanov, Economical Channel. At evenings, I'm really having fun gathering the statistics about the Russian economy since 2001, putting together economic models and regressions using the statistics that is being published by the Central Bank of Russia as well. And when reviewing the advanced indicators within such a model, such as the business climate indicator, I came to an interesting discovery. The meaning of the business climate indicator during the last month of the quarter is really a good thing if you want to predict what will happen in the economy over the next quarter. And so my question is, what kind of weight in making your key rate decisions is being attributed to the advanced indicator? Have there been cases when the advanced indicators considerably affected your credit policy trajectory? Well, thank you very much for your question. Well, indeed, this could be a discovery, because so far I haven't been familiar with any advanced indicators. The only one which, the precision ratio, would be so good to predict the economic situation in the country. So we prefer to base ourselves, our analysis, upon a comprehensive set of factors, different indicators, statistical, surveying, and advanced ones. But I would like to tell you that we also pay a lot of attention to advanced indicators, amongst other things. The survey indicators, because we trace the way the businesses and the economy adjust themselves to the tax changes, and as well as the monetary policy impacts. But you asked about an example when the advanced indicators could change our vision of the key rate trajectory. Somehow I cannot recall such a situation. Mr. Zabotkin, maybe you may remember one. Well, I'm afraid that we will limit ourselves to a standard statement that the decisions are being made upon the full comprehensiveness of data. Like I said, yeah. So in order to be able to tell you what could be this individual indicators based upon which this or that decision is being made is just impossible. There is no answer to such a question. But with regard to the last quarterly month is quite entertaining, offhand. That could be related to the business plan updates, because on a quarterly basis, most of the businesses are updating their business plans, and so the predictive force in terms of the last months of the quarter, or the first months of the quarter, could be better than all the rest. Yeah, but thank you very much for this good idea. So you put more work into Mr. Zabotkin's hands. Yes, please continue sharing us more of your discoveries. Are there any more questions left? Yes, Natalia, go ahead. Good afternoon, Natalia Kotovskaya, Pro-Finance. The central bank is running a very broad explanatory work in the awareness policy with regard to the digital ruble. But there are a lot of myths still remaining, all the way to such, people saying that total control of the spending is going to be instituted, or cash is going to be completely banned. Now, how does the central bank may fight this barrier of mistrust? Well, I think you should agree with me that having a mistrust towards everything new is quite natural, because I do remember when we used to have payment cards coming for the first time, there was such a lack of trust towards the fast payment system. Currently, it's only natural, although people also remaining who prefer cash. Cash is not going anywhere, it is going to remain. And also, the digital ruble is going to very gradually enter into our everyday life. There will be individuals who will never agree to use this, which is going to be quite normal. In no way we are planning to make it a forceful something. We wanted to make it a matter of comfort. There are so many myths around the digital ruble. I absolutely agree with you. Like, for example, that it is necessary in order to control what people are paying for. But believe me, I never cease to say it in terms of the transparency of payments and the banking secrecy protection. The digital ruble is no different from non-cash rubles. Everything is the same. The only difference, there may be something that we're debating quite actively, is that there come more possibilities to control the purpose-specific fiscal funds spending more accurately. There is some control of it already. There is control in place over how the budgetary funds are being spent, but the digital ruble enables one to automate it, to forget about the manual audit thereof. There will be smart contracts. For example, if the fiscal system allocates funds to build a school, clearly, it would be quite easily possible to trace that this money has been spent only on that school. So this is control over the budgetary means, where the digital ruble offers greater opportunities, greater possibilities through a smart contract application. But we do understand that the level of awareness is necessary, but, explaining things continuously is not enough. With regard to any new instruments, it is important for people to try themselves what digital ruble is all about, or to hear from their circle of friends who they trust that digital ruble is being used. Nobody's going to force anybody to open up accounts in digital rubles, or to pay in digital rubles, or control transfers. It is necessary for people to really come to this understanding themselves. And only in the autumn of this year it would be made possible. But throughout this period, we will try and talk more and more about it. What is it that the digital ruble creates in terms of the consumer comfort? We've got time for a couple of more questions. Vadim, please. Yes, good afternoon. Vadim Solobuzov, Kommersant. Once again, still back to the fiscal factor. Considering your release, there is a very hesitant attitude of the central bank towards the government policy. Since the previous board meeting, somehow the expectations seem to have improved in terms of the deficit and income. At least they don't sound as catastrophic as they used to be. Do I understand correctly that the central bank is not really being impressed by it, because the income growth may turn itself only into greater spending, which is a pro-inflationary factor? Thank you. Well, in the meantime, the budget policy remains in the uncertainty area, because we act on the announced budget parameters. The budget discussion is still going on, like I said, but there is also an expected improvement of the oil price growth situation. But I would like to draw attention to, whenever there is a fiscal rule being effective in the economy, then any change in the pricing situation in the global market, its impact upon economy is limited, because the fiscal rule neutralizes the effect of any significant oil price fluctuations and its impact upon the domestic prices and inflation. What is really important is the final budget parameters, what they will look like and the structural budget deficit, not the general budget deficit that many are paying attention to. And also, it is important to make a decision with regard to this, not only upon the current key rate, but also for the next year, because our monetary policy works with a bit of a lag. So we're here expecting the government to come up with more specific information. Mr. Zabolkin, it is important for us to have inflation at a lower mark already this year, as well as next year, within different scenarios. And so decisions are being made in such a way so that the inflation would be brought down and will come down within any scenario. Well, dear colleagues, our last question, I guess. Sergey, please. Thank you very much. Sergey Bolotov, Expert magazine. Could you please tell us, why do you think, although the consensus guessed the key rate decision correctly, but somehow most of the expert community, or the larger part of the expert community, is difficult to say, and many business representatives had a different kind of expectation compared to the central bank's rhetoric, particularly its key rate decision. Why? What do you think the market cannot understand? How can it improve its understanding of the central bank's policy? Well, first of all, I would like to say that the market is quite aware of the rationale behind our decisions and what we stem it from. You see, with respect to the margin of our reduction, the consensus was quite broad and unified. Maybe some are less cautious in understanding the true inflation dynamics. And maybe their interpretation of the inflation weekly data was more literal, which is literally relatively low, and we stated that not the weekly data is important for us. Monthly inflation data is more important to us so that we could see its dynamics. But possibly they paid great attention to the economic activity. I mean, the market players and the analysts in January, February. I mean, it's January, February statistic. As I said, with regard to inflation, monthly data is more important to us and its dynamics rather than the weekly data. We've always been saying it. Similarly, with regard to the economic activity assessment, quarterly data is more important to us, and the correlation quarterly one, because there can be quite a high volatility within a quarter and within a year. So we're doing our best to make our conclusions, analyzing the forming midterm trends. Definitely paying attention to the frequency information that is coming our way, but attributing more weight, if you will, to the forming trends. I guess that's the way one can explain it. Thank you very much, dear colleagues, for a very